What's up? What's up, everybody? Thanks for watching this video. I'm going to go over every trade that I took today, Tuesday, March 22nd. We're going to go over every step, everything I saw. And first things first, we have to get our verse, right? Before we jump into the chart, I always go to this verse. It says, "Be strong in the Lord and in his mighty power. Put on the full armor of God so that you can take your stand against the devil's scheme." So I don't know what the devil's scheme might be looking like on your end, but when we're talking about trading, it is always confronting fear, confronting emotional intelligence. All right. So today I woke up at 5, man. It was early. It was a little bit more like 5:15, something like that. So I jump on the chart, and here's what I want to do. I want to show you. I look at two different charts. I pay for this in this view on tradingview.com. And for the new guy, right? The new guy. What's up, man? Thanks for checking this out. You're gonna have to go to TradingView and we're gonna have to work on this together. TradingView.com. I use two screens. One here is showing me one approach, and here is showing me another. I can go over each one of those here in just a minute, but we're looking at each trade today, and this is full transparency. Okay, this is full transparency. Oh Jesus! Okay, that's just an alert. Don't mind that. I don't know why it's an alert. It's okay. We're live to tape, and there's no edits. All right, because I just want to get this to you. All right, so woke up at 5, a little bit after 5, and this is what I saw on the chart. If you look at this screen here, okay, this is the 1 minute chart, US 30, and I have some indicators on here. Of course, we always approach the day with currently we're using this approach. It's called the 12-hour channel. I use a fib that I have dubbed the Q fib. All right, which is this purple range right here on this first candle of the trading session, which started at 5 p.m. yesterday and ended at 5 a.m. today when I woke up. And then we started printing this candle here. So what we do is we mark that up as soon as we wake up, right? As soon as we get to the chart, we mark that up so we can see where we are in the in respect to what has already printed, and so we look for opportunities to enter based on that channel, as well as based on a few other key components or criteria. We don't just jump in. We're like, oh man, price is doing this, that, and the other, let's jump in. No, that's not what we do. We take our time. We take a more professional, very monotonous approach, right? Which currently we are practicing writing down every trade, what time we get in, what kind of entry is it? Is it a buy or a sell? Did it result in a win or a loss? Did you get, what were the points receipt or points in profit? What did it look like in dollar amount? And that can change for everybody because everybody's not doing the same kind of account size. And most importantly, why did you get in? Okay. I'm going to add to this, why did you get out? Okay. A lot of times it's just because of stop loss and stuff like that, but we'll go on and we'll explain that a little later. All right. So here we go. 4 minutes into this video, I haven't showed you a trade. Here's the first trade. I wake up right at 5 and I watch price do his thing. I'm making coffee. I'm doing some stuff. I'm trying to wake up. I see it exit here. I see it exit. Well, here's my little smart-minded self. I said, nah, you know what? I ain't getting into this one yet. You know, I had already planned on being in pre-market, which is any trades or what the market is doing before 8:30 a.m. I said, I'm gonna let this, go, and I'm gonna see what it does. And I'm looking for price to come and do a simple break and retest, right? Break meaning it broke out and closed, and I want it to retest and give me a continuation. Well, this indicator here, if you can see, is a blue kind of range right here that once was yellow turned blue, which means once was resistance, now turned support. So what was keeping price down is now holding price up. All right, so I'm looking for it to hit that resistance and then continue up. All right, so that's what I'm thinking could potentially happen. So I just wait a couple more candles, couple more minutes. Each minute is a candle. Each candle is a minute. It comes back and touches the top of the purple channel and starts to reject. Well, then it starts to kind of hang out at the top of the channel. I'm thinking, okay, at some point it has to break, right? So I take this entry here, and my stop loss from what I'm reading here is 28 points. Well, now check this out. So here you see my entry. Hopefully you can see this on your screen. Is here. My stop loss is here, and I'm going to target a 1-to-1, right? And let me just tell you right now, today we had 4 losses, 1 break even. 4 losses, and this is why I wanted to do this video, to kind of share with you and show you how I edit my approach, okay? How I edit the way I'm going to enter in a position in the market, especially in pre-market. And I'm contemplating just leaving pre-market alone, but here's what happened today. All right, so we continue to watch price print. It starts to find resistance, meaning that it touched this little area here and starts to resist it, meaning wants to push up. So I'm like, okay, cool. This might have been a great entry. It resists more. It ranges. It gets in profit just a little bit. And then we start to see a drawdown. So we're in drawdown. Okay, we're in drawdown. I'll say now when I'm in this kind of drawdown, I'm thinking, okay, it has to find support somewhere. And I think it's going to find support on this 50 moving average, this red line here that's on my screen. So I see it start to resist that, and then I don't know if you caught that, but it just completely takes me out. And I'm doing a video, dude. Good morning, Pop. Leave that door closed. Thank you, son. All right. Yeah, that was Pop. All right, so we continue. It takes me out pretty quickly, very soon after I entered, like just a few minutes. And I'm thinking, oh snap, not a good way to start this morning. So there's my 28. The thing about this is that I'm risking 0.5%, okay? 0.5% of my account. So I didn't totally lose a 1%. And our rule of trading is only risk 1% of your account size. Okay, so if I have a $25,000 account, which is what I trade with, a funded account, then I need to only risk $250 per trade. Okay, per trade. So I still have opportunities to trade if I use less than 1%. So that's what this entry was. It was a big fat red X. All right, so I'm gonna put a red X right there. Okay, and so I'm just gonna let price print. I'm gonna be calm, let price print. Just because you lost doesn't mean you have to jump right back in and say, oh, we were buying, now the price is going down, we need to jump right back into a sell. No, that is not what we're gonna do. Okay, we're gonna practice patience. All right, so we let price print. It kind of still plays around with the idea that, you know, it wants to break out. So why did I get in this? Let me answer this question. Why did I enter into this? Well, if you look at this screen here, it's on a higher time frame. It's on a 5-minute. And so what I saw was that there was a breakout, right? There's the breakout. Here's the retest, right? And I see that it's breaking out not only of the channel, but it's also breaking out of what I use sometimes for potential entries, and that is this green coaster line, this little green and red coaster line. They look like little roller coasters. So yeah, so I saw a breakout of that. It starts to retest, and then in this 5-minute candle right here where it starts to go up is where I enter, and then price continues to fall, and takes me out right there. which is basically, if you can see on this screen, it's testing this trend line. So I drew a trend line. You can see it here from this low that happened at 3:30 a.m. right? I drew a trend line, and it was basically on some of these candles here. It starts to follow that trend up. So it basically just took me out right there at the trend line. Now, what could I have done better or different? I could have set a better stop loss. Stop loss was set basically on this kind of idea that the price range here was enough to keep price from going further down. Well, I could have made this stop loss a bit wider, and I kept it kind of tight. If that was the case, if I were to keep it wider, I should have, and could have, and shoulda, coulda, woulda, kept it right here at this range, right? This bottom of this recent swing low. Let me make sure you all can see that by expanding this screen. Okay, recent swing low is right here. Okay, meaning that here is the most recent low, right? That happened right around 4:30 a.m. Okay, so there was a low there that I could have targeted as a stop loss, which would have given me plenty of room for price to kind of fluctuate before it decided to go in the direction that I was hoping or thinking, not really hoping, because we don't hope trade, but thinking along the lines of rules-based, right? That we could have entered and had this stop loss here. Typically it's at 66, 65, just to cover this, and then a little bit of buffer right here at the bottom, which there is also support here. So price would have had to come and smash through support, right? And then continue further down. And at that point, it's still 0.5%, right? 0.5%. So that's what we could have done different. But there was also different confluences, not just based on the breakout of the 12-hour channel, but also the breakout of the coaster channel, which a part of this rules based is that you look at these indicators here, and if this indicator is showing green, then that should be cool to enter, right? Should be cool to enter. If it's showing that this indicator beneath the green line is showing, let me just kind of back up a little, it's showing that it's moving above, then that is also a good criteria met, right here. It's moving above that middle line, and it's turning in the upward direction, so it seems like everything is going up. Well, that's not what happened. So risk management, ladies and gentlemen, is what keeps your capital protected. Okay, so as you can see, price continued to print. It never comes to this stop loss, but it did take me out at a 28-point stop loss. I hope that makes sense. All right, so going for further, that was the first loss of the day. That happened at 5:45 and ended at 6:19. Okay, the next potential entry, or the next entry that I took, we let price print. It comes and tests that trend line again. We're seeing it range again. This would be a great opportunity to bring out that box. Y'all know about that box. Okay, so here is where my next entry is based on the bullish breakout of the 12-hour channel, and we wait for it to close. And yet again, the stop loss was 33. So I'm gonna move this down to 33, which it is this current or most recent swing low here. So seems like a good opportunity, right? Seems like a great opportunity to get into a buy situation. And so that's what I do, and I risk yet another 0.5%, right? 0.5%, which once I see what happens with this trade, you'll see what happens when price starts to print. It's finding resistance in this yellow zone, right? That's resistance zone, the yellow zone, right? Not the golden zone, the yellow zone, caution zone, right? Finds resistance, breaks above it. Oh man, we break above it, but we don't reach a 1-to-1, which is our first take profit, right? Take profit. So we let price just kind of marinate and simmer a little bit. It finds support. It looks good. And then we get this bearish order block, or a bearish candle that breaks through support, and now support has become resistance. Okay. And you know that because now it's yellow caution. All right. So yellow take, man, you can't pass here. You know what I mean? All right. And now price starts to drop. We see price try to challenge that entry point with yet again another breakout of the 12-hour channel, which I'm thinking, man, this is good. So we see it test resistance one more time, and then we are met with a candle that gives us caution, right? And it says break of structure. All right, so here's where we have to make a decision. When a break of structure happens, that means that price is going to potentially continue in the direction that price has broke structure. What does that mean? Well, it broke structure going down, so it's potentially going to continue going down. Well, it hasn't hit our 33-point stop loss, but what do we have to decide? We have to decide, do I cut my loss short and take a 17 point, let's see, 17 point or 19 point, sorry. It's a 19 point loss, right? A 19 point loss, and jump into a sell. Well, that is what we do. We take our loss short. We cut our losses short, right? So instead of 33, it's 19. And so I still have a little bit of capital left to use on these trades for the day, right? So one trade, 1%. So I cut the loss short. I jump in the sell. Let's see, stop loss on this sell was 11, right? So here's 11 point stop loss to reach a 1 to 1, meaning I use 11 to get 11. It tests the trend line. So the trend line is still going up, right? The trend line has yet to be broken and closed beneath until now. Okay, so this is a good sign. So do we hold it? Yeah, we hold it. Do we hit a 1-to-1? Almost at that candle there. It seems like it wants to hit, and it does hit. Okay, it does hit. So what happens when it does hit? That means that I move my stop loss from being 11. Now I move it into profit, and now I'm able to kind of relax and say, okay, I can't lose. So if I get stopped out, if I get yanked out of this trade, I'm still going to have profit. And so that's exactly what happens. So we do hit 1-to-1. We go a little bit in the further profit, which then I would target a 1-to-3, which gets hit. A 1-to-5 gets hit. Okay. I'm sorry, 1 to 1.4 gets hit. And I'm looking for a 1-to-5. Which gets hit here. Look at this. Gets hit here. And it goes to 1 to 1.7. Now, we're continuing downward, which I'm thinking, okay, cool. Where are we targeting? We're targeting the next support zone. We're going to target the next support zone. Now, this is the part of trading where you cannot be impatient and you can't be greedy. You can't be greedy, man. Look, price says, okay, we're going to continue further down. Right, which is a 1-to-2 right here. Shoulda, woulda, coulda. Should be done. Should just completely just take my profits, take the money that is being generated in this market, and be done at that moment, and let price print. So price continues to go further down. Then I see large candles coming, which means that there's some movement in the market, which means that price now has reversed. Okay, price now has reversed. Okay, so my stop loss is still in profit. And I have to ask myself, like, what kept me from taking a 1 to 2.5? Well, maybe it was just not thinking clearly about it, but you always have to think clearly. And so then next candle takes me out in profit. And so it is a winner with profit, but it is a break even. So instead of getting a green check mark, what we're going to do is we're going to just put, we're content with it. We're just going to put a happy face right there. Okay, we're gonna put a happy face because it broke even at 2 points. So that's what happened. All right, I know this video is going long, but it's worth watching how this happens so that you can edit, the approach. So when it gets to what could we done better, we could have, number one, with this entry where we cut our losses short, similar to the first trade of the day, we could have potentially let price print, which would have eventually taken us out of this trade, but it wouldn't have taken us out of our first trade. So, you really have to really be mindful of those stop losses, right? How much do we risk? Okay. So what else? We made a decision to do the cut the losses short, jump into a sell, although selling at this point would be counter trend trading. We're just mindful of it. We're mindful that we're going to risk minimal to get maximum profits. Okay, so we got into a sell situation. We end up going to a 1 to 2, but I can't really say why I didn't take profit. There's no reason why. Shoulda, woulda, coulda. That's the profit. We leave with a break even, and that's what happened. Okay, so now we are out of trades. We are on Zoom. We are talking through a lot of ideas, through a lot of things that could have potentially happen. And what happens? Price touches the stop loss in profit and then continues to, what does it do? Melts like butter. Here's butter. It just starts to melt like butter. So we watch price print. We're saying, that was great. That was amazing. Good job, price. It comes and does eventually find support here in this blue range. Okay, the support range, the blue support range. Blue is the support range, right? And then exits that range with a very bullish candle. And then test the support one more time. At this particular point, what I could have done, and I think I did notice, was that there was this swing low, right, that broke through support here, right? Can y'all see that? Let me make sure y'all can see that. There it is right there. So you have this swing low, right, this recent low, and the recent low here. That's happening at 7:30. The other one happens at 4:30. Equal bottoms, which means double bottom, which means price, get ready, wants to go to the moon. Okay, and so once we see that, man, we just watch price print. We're patient. We're not jumping into a buy until we see a break of structure going up. Now, I did not enter this trade on my funded account. I did enter it. I marked it up on TradingView with a 21 point stop loss. And I entered on the demo. Okay. And this was the trade entry, man. This was the one. So we just keep watching price print, right? We keep watching price print. We keep our 21 point stop loss. It's valid. It holds up. We hit 1 to 1. Then we move to a 1 to 3. That gets hit right here. Then we go to a 1 to 1.5. That gets hit here. And then we target a 1 to 2, which let price print. It gets hit there. All right. Well, we also take an entry based on this breakout of the 12-hour channel. Now, this one, I do enter at 7:58 on a buy. And let's see. Yeah, 7:58 on a buy. And the stop loss, let's see, the stop loss looks like it was 21. Okay, 21. And so I'm targeting 1 to 1 here. Now you can already tell that this stop loss was based on this little bullish order block, the bullish order block, right? So if price does come down, it has to challenge that bullish order block. And what does price do? It comes down, gives us a good bearish candle, lots of volume. It challenges the trend line, breaks through the trend line, closes beneath the trend line. Now we're back in the 12-hour channel, okay? And we're kind of hanging out there. We get another break of structure going down, right? Going down. So it happened here, right? It happened here, and it happens here. And instead of a 21 point, we get a 14 point stop loss hit. So we cut our losses short and we jump into a sell, okay, again. All right. So I hope you're keeping up. Yeah, so currently we had a pretty significant loss on our first trade, which was 0.5%. And then we lost, in terms of dollars, 53, 60, 70. So yeah, not close to another 0.5%. We still have some wiggle room. So we enter into a sell. We put our stop loss at 23. Okay. And we're thinking, okay, price definitely is rejecting. That was the third time that price exited and rejected, exited and rejected, exited and rejected. Looks like a triple top. It enters into that bullish order block, which is right here, these green lines, right? These green lines. And then price starts to kind of just range. We get a break of structure now going up. What I just question myself all the time. I just ask myself, what could I do better? Well, what I could have done, shoulda, woulda, coulda. I could have stayed in this trade here. I could have stayed in this very first trade here and never even entertained any more entries. So, okay, so what ends up happening? Well, price at this particular point, we're getting close to 8:30 a.m., which we know our rule is we don't enter on an 8:30 candle. But if we're in a trade, we just let it play out, right? Let it play out. So we've already taken, let's see here. Yeah, we've already taken several entries. One entry, we just did a markup right here, and it's still valid. So the demo account is going really well, right? It's already kind of to the moon, you know. But what ended up happening was I took out that demo trade at 1-to-1, and I'm just being fully transparent. No reason why whatsoever I should have taken that out and taken profit there. It's just that's what happened, and that's what I did. And it was a demo account. I thought it was a good entry. I practiced a good entry, but it, you know, had it been left in, man, it could have and should have made us a little bit more profit. All right, so we get a break of structure here. What price does the next few candles is breaks out again of the 12-hour channel. Right? And then this next candle, these are the 1-minute candles, it hits my stop loss of 23. Here is yet another loss. All right, so that's the loss that we incurred. At this particular point, that is the last entry that I took today. So 4 losses, count them up, 1, 2, 3, 4, and 1 break even. Okay, with a total loss of 1%. Now, what's great about this? What's great about it? Because you always got to look at, you know, man, you lost all those trades, man. Yeah. Don't forget I won a markup trade here that just is amazing entry, but did not enter it on my funded account. Did enter it on a demo and exited at 1-to-1. Now, here's the deal. Risk management keeps you in the game. If you've watched this long, 30 minutes, then you need to understand risk management. When it gets to the point where you are understanding your rules, writing down every entry, making sure that you protect your capital, it gives you another day to enter because you haven't totally exhausted your account. Now, I don't know if you've ever had insufficient funds in your account, and everybody knows that ain't no fun, okay? So the risk management here that we practiced, and just being able to go back and know exactly what happened is why we do the class. This is what we trade. We want to make sure that you're not over leveraging, over trading, risking too much, right? And really having the emotional intelligence, the proper risk management in place and rules so that you can have the opportunity to do it again, because this doesn't always happen. Okay, with that said, here's where it gets really kind of interesting. We watch price print and it just completely slams down, right? The next candle completely slams, goes back to my entry point and exits again. Then the 8:30 candle just rips right up. And what did we say it was going to do with those equal lows? Those equal lows that are happening right here. Okay, if I were to jump to a higher time frame, you would be able to see that those equal lows are so strong and valid. Here's a low, and here's a low, giving us double bottoms. Okay, all right, so double bottoms means price wants to go up. Basically what that means, and you can see it here pretty clearly, that it enters into this support range once again, gives us a breakup structure going up, which is my entry, going in a buy, and then it just continues. It never comes back into the support zone, and then to the moon, to the moon, to the moon we go. And this is why we don't enter on the 8:30 candle, because it is so volatile. It gives us a bullish and then a bearish in candle, and then continues down, breaks out of the 12-hour channel yet one more time, just to take us down even further to find support. And then here is a massive candle taking us all the way through resistance, through the top of the 12-hour channel, and closes. And then we go to the moon. Okay, and price continues to make higher highs. It challenges the lower price ranges, and just continues to go to the stars. All right, then it starts to retrace, mitigate some imbalances left down in the bottom or lower price ranges, and then continues up. And you can see, I'll just go ahead and get us closer to where we are currently in the market right now. It's going to continue to print. It makes higher highs. It ranges for a second, right? It makes a retracement, and now here's where we are right now. It is challenging the trend line to the decimal. This is trading. This is trading. It is something that sometimes is very clear to see, sometimes not so clear. But what do you have to have? You have to have patience. You have to have discipline, and you have to have rules, and you have to have accountability to those rules by writing each entry down. Now, had I jumped into another entry, I would have broken a rule, which was risking more than I needed to risk, because I had already lost 1% of my capital. Well, that's just 1%, man. That's just $250 out of $25,000. You got $25,000 that you can trade with. Why are you only using $250? If you lose $250, why are you stopping? because that is a rule. And you don't break the rules, man. Once you start breaking rules, then you got to break more rules to keep up this rule breaking mentality. You got to break the rule breaking mentality. You got to stop when it's time to stop. And then you have more to continue with later. All right. So that was the trades for today. Now, in hindsight, man, hindsight is always 2020. The buy that I had initially, with given a proper stop loss, right around 60 or 63, would have been the entry, the one entry that I would have needed to make a significant profit and be done for the entire day. So what do we take away from? Stop losses. You have to use proper stop loss based on structure. That's it. All right, guys, that's going to do it for today's video. I know it was a full one, but I know it was a good one too. You learn from your mistakes and really learn from it and then teach it to somebody, right? Attain it, retain it, and sustain it by giving it away, man. It's an amazing day. It's snowy here in Amarillo, so stay warm, stay cool, stay profitable, stay consistent. See you in the next video.